Recording in progress.
Good morning, students. We have done in the previous lecture up to investment decisions. Now we are doing the financing decisions. Financing decisions basically are involved in identifying that how much of the funds are required and what will be the various sources from which these funds will be raised. So we are basically having two different funds. One is shareholder fund and another is a borrowed fund. Shareholder fund basically is the fund of raising money, a source of raising money through equity. And borrowed fund is the source of raising money through debt market. So while raising the funds from these markets, we have to understand how much of the cost, what is the risk, and what will be the return on investment from the money from the projects where this money will be invested. So without undertaking these factors into consideration, we are not going to raise the funds. And we, after understanding how much of the burden will be on us, we decide from where to raise the funds, i.e., from how much of the fund to be raised in the form of debt and how much of the fund to be raised in the form of equity. Okay. Generally, we know that debt is cheaper than equity because tax is deductible on the interest which is to be paid by the debenture holder and the benefit is received by the company itself. So, while taking any decision, it is very important that we are going to measure the overall impact of the funds being raised on the working of the business organization. That is very important. Now, here is the difference between debt and equity. Equity basically and it includes your equity capital and retained earnings. Okay, equity is involving no fixed charge. Okay, regarding payment interest and repayment of capital, whereas debt में जो है आपके पास it involves financial risks and another thing is it includes interest payment as permanent liability, and in form of debt, we raise money in from debentures, loan, or other forms of debt. Okay. Now coming upon to the factors affecting the financial decision. First factor which is involved is cost. The cost of raising funds is very important factor which has to be taken into consideration while raising the funds because this cost makes an impact on to the profitability and smooth functioning and running of the business. So we have to find out what is the cheapest possible source available from where the funds can be raised and that can be employed for getting better productivity in the organization. So that is the first important factor while deciding the source from where the money will be raised, i.e., either from equity or from debt. Second is the risk involved. Then, how much of the risk is involved in raising the funds? That there can be moderate, there can be a low risk, there can be high risk. So you have to understand the amount of risk involved. Means if we have raised a huge amount of money in the form of debt and suddenly the business, the project does not take up, so we will have to suffer a burden of repayment of the liabilities at the shortest possible interval. But in case you have raised equity and in long term, in the business is not working and you have raised a huge amount of money from the market, then your goodwill will ruin and it will not impact only one business, but it will impact the other units also. So you have to calculate the risk involved. What is the total amount of risk involved in the funds which is you are being raising from the market, whether it is a low risk or it is a moderate risk or it involves high amount of risk while you are raising the funds. Third is the flotation cost. Flotation cost is that how much of the money is required for raising the funds, that what are the various other expenses like underwriting expenses, brokerage commission, and various other expenses you have to bear while raising the funds. If the flotation cost is high, then the fund which is being raised is becomes less attractive as compared to the fund where the flotation cost is comparatively less. Another important thing is the cash flow position. Okay, then company the cash flow position of the company also impacts the source of finance. Okay, if company is having a strong cash flow position, it can easily raise funds from the debt market. Okay, whereas in case the company is having a weak cash flow position, it can raise money from the equity market. Why so? If the cash flow position is strong, then the funds, if raised through debt market, can be easily repaid in the form of interest or debt bearing in debt aspects. But in principal amount can be easily paid off. If you have the weak cash flow position, it is not advisable to raise funds through debt market because there is a permanent liability on the debt and it will not be easy for the company to bear that. So while raising the fund, you have to see that what type of fund is to be raised in case of your strong cash flow position and in case of weak cash flow position. Another is the fixed operating cost. Now, what are the fixed operating costs? Fixed operating costs are the costs such as your interest, okay, such as salaries, wages, or various other expenses. Okay, so you have to see that while investing, and we have to understand, and if the companies are having more of the fixed operating costs, less amount of money should be raised in the form of debt. Okay, as compared where the companies are having less amount of fixed operating cost burden. Okay, because in fixed operating cost you have to bear a huge amount of money. Okay, and if you have raised debt for repayment of salaries, interest, or various other thing, it will add on to the cost of the business rather than reducing the cost. So it is not advisable to raise debt in case the company is having higher fixed operating costs as compared to the companies having less fixed operating costs. So, in case of less fixed operating cost companies, you can raise debt easily, but in high fixed operating cost companies, you should avoid raising debt from the market. Then, control consideration is if you want to have tight control over the business activity, you don't want to share or you don't want to give the voting rights to the investors, then you can raise money from debt market. But if you don't mind that decision making power is being liquidated and gone into the hands of other investors, then you should invest money through equity market. You should raise money through equity market. Then there is the state of capital market is there. In case the market is bullish, and then you can easily raise, means bullish means recording in progress. Okay. So if market is bullish, you can easily raise funds through equity market because fund is freely available in that market in these when market is on the rise. But when market is on the low, slow down, is not actively behaving, then you can should raise money because it becomes difficult to raise money from equity market, then we raise money through the debt market. So these are some of the factors which had to be taken into consideration while taking the financial decision. Now coming on to the dividend decisions. Dividend decision is that company has to decide how much of the amount has to be distributed out of profits in the form of dividend. Okay, because dividend is part of the profits, which is it is the part of the profit which can be or which should be or which should not be distributed to the shareholder. It depends upon the policy of the company whether they want to retain it into the business or they want to distribute amongst the shareholder. That depends upon the circumstances through which the business is moving. Okay, so that is what the dividend policy is. And dividend distribution depends upon the profitability of the business. If the business is earning huge amount of profits, then we can easily share dividend among the shareholders. But if the business is having less profitability or it is having some future projects being there in upcoming in the upcoming times, and the companies prefer to retain more amount in the form of retained earning rather than distributing them to the shareholders. So that is what the dividend decision is. Now, what are the various factors which are going to decide the distribution of dividend? First is that how much of the earnings are there, the current earning and the past earning. If the earnings are good and stable, then they can easily distribute the dividend among the shareholders. If the earnings are not stable, or if the earnings are good in the current year, but in the past it was not good, then companies prefer not to distribute dividend because they want to stabilize their earning capacities. But if the past and the present condition are good, and the money is easily being available with the companies, and they don't see any problem in the future, so they can easily distribute dividend among the shareholders. Second is the stable earnings. Dividend is being distributed after taking into consideration how much the stability of earning is. If the earnings are unstable, we prefer not to distribute dividend. But if the earnings are stable, we prefer to distribute the dividend so that the investor feel happy, good, and remain intact with the organization, and invest more money into the organization and create extraordinary goodwill for the company. Then there is stable dividend. Stable dividend is an environment where the percentage of dividend is kept constant, because if the percentage of dividend fluctuates over a period of time on regular basis, then people lose confidence in the company, and they start feeling they start developing a negative feeling about the company, that there is something wrong with that. Some years it is earning good amount of profit, another year it is earning poor amount of profit, as a result of which the dividend distribution get impacted. There is some issues with the company, we need to check out those issues, so that impacts the goodwill. And it is very important to stabilize that dividend distribution if we want to have a better environment for the company in the market and attract more and more investment from the market. Okay, that is what the stability of dividend. Growth prospects is there. Another factor, growth prospects is that if there are some future projects available for the company, then company will, instead of distribution of the dividend, will prefer to retain that money into the business, as a result of which it can use its own funds for the investment or for financing of the business, rather than depending upon the outsider source, which can be unreliable at any point of time. So that is the another reason why dividend distribution policy need to be decided after taking into consideration whether we are having some project upcoming in the future. If not, then we can easily distribute the money. And if yes, then we should retain money and should stabilize our financial position so that we don't have to depend upon the outsiders for investment purposes. And once it grows into a full-fledged project or in a better project, then we can attract the investment from the market also. So that is the another important thing. Then cash flow position is there. If the cash flow position of the company is good, means cash inflow is better than cash outflow, then we can easily distribute dividend amongst the shareholders. But if the cash flow position is not good, means cash outflow is more than cash inflow, then we should prefer not to distribute dividend and maintain that profit in the business so that we can improve the cash flow position of the business for the betterment of the organization. Then there is preference of the shareholders. If the company is having more of the aged investors who want regular earnings, then more of the money has to be distributed in the form of dividend. But if we are having young investors in the company and they want their capital growth and they don't prefer to get more dividend from the company, then dividend distribution is being delayed, or we distribute less amount of money in the form of dividend and retain more amount of money for investment purpose and for expansion of the business organization. And that is the another important aspect which has to be taken into consideration while deciding the dividend distribution. Okay. Then taxation policy. The tax which is being paid by which is being paid on dividend is paid by a company. If the tax rate is quite high, then we avoid dividend distribution because it increases burden of tax onto the company. If the tax distribution is, if the rate of taxation is less, then we can easily distribute the dividend because it will attract less burden and on the company, and we can easily then distribute money amongst the shareholders. Okay. Another is the stock market reaction. If on distribution of dividend and stock market has has reacted positively and it has led to improvement into the prices of the shares, then we prefer it as a good decision. But if the market has reacted negatively to the decision being taken and by the company about distribution of dividend, then we prefer to not to distribute because market is not preferring that particular decision from the company, and thus companies retain profit into the business for the expansion or for improving the financial position rather than going into the market and distributing the dividend. So stock market reactions are also making an impact on the distribution of dividend. Then there is contractual constraints. There are contractual constraints in the form of agreement between being entered with the lenders. If they restrict the companies distribute the dividend beyond a particular level, then the company can't take any decision. So while making such decision, it is very important that there should not be restriction on the company regarding dividend distribution. If there are certain restrictions, then we have to avoid distribution of dividend, keeping in mind the contractual agreement. Okay. Then there is access to capital market. If we have easy access to capital market and we don't have to depend upon the retained earning for the financing of future projects, then we can easily distribute higher dividend. But if the access to capital market is difficult and market is in the slowdown process, then it is advisable not to distribute dividend and maintain it as a retained earning in the business to improve the financial position of the business. And the last is that the legal constraints are there, that we have to comply with the legal rules and regulations of the Companies Act, and it should be taken into consideration that the and that the money to be distributed in the dividend should not break those rules and regulations, and we adhere to the restrictions being laid down in complying with those decisions, and so that no action is taken against the company, and that is very important aspect. So these are the some of the factors which need to be undertaken while distribution of dividend. Okay. So in next lecture we will be doing financial planning. Thanks.